Hey, this is Brandon Brittingham, Maryland Delaware Group of Long and Foster, here today with Rich Barr on the Maryland Delaware Group podcast. One of the things we're going to talk about today is home ownership and just a lot of misconceptions and myths that are out there that I think sometimes prevent people from even getting in the process of looking for a house, right? You were a consumer not that long ago, where you had bought your first house before you got into real estate. And just, we want to unpack a couple of things that, most people out there probably don't know or misunderstand. So, when you went to buy your first house, like, what do you think one of the biggest misconceptions were for you?
The biggest one that I had was definitely financing in general.
Yeah.
So, I think the biggest misconception is going to be that you need 20% down.
Sure.
So I think that was probably what I thought the barrier to entry was.
Yeah.
And I think that's something that we kind of fight, or not fight, but, try to educate the consumers every day on that. Hey, there's a lot of different programs. You don't need 20% necessarily. We might even be able to find a program that you only need 3.5%, 3%, or maybe nothing down.
Right.
So that's something that, I think is the biggest misconception that I've been working on.
Yeah. So I think on that point, I think the biggest thing is, the whole credit, like what credit you need to have. Credit is a sensitive issue with people. And I think sometimes people are scared to even get their credit pulled because maybe they're embarrassed that their credit score. But, at one time my credit score wasn't good, right?
Mm-hmm.
So, and I didn't know what qualifies me to get a loan, doesn't qualify for me to get a loan. And, in our world, we've seen situations where people had stuff on their credit and they didn't even know it was there. And we were able to help them get through the process. So, just running through a couple of things, in some instances, you can get an FHA loan, which most people refer to as a first-time home buyer's loan with a 580 credit score. And then, 620 and up, it starts to, kind of go from there. But I think a huge misconception is kind of the whole credit piece.
Yeah.
And that quote unquote, you got to have good credit, to buy a house. And then, just the people are scared, well, I don't want to get my credit run. Well, the only way you're going to know if you can buy a house or not is have somebody look at your credit.
Well, and to that end too, that's why you want to go through that process and start that pre-approval process if you are, even interested in buying a house, because that's where a lot of times, like you said, you might not even know there's something on there, and that's where it's going to get caught. And the majority of the loan officers out there, they're going to help you understand your credit score, understand why it's where it's at, and then help you get it where it needs to be if it isn't where it needs to be.
Yeah, there's been countless times when we have worked with people that took them a year and a half. I mean, we've gone 3-4 years with people to help them get their credit to where it needs to be in order for them to purchase a house. But I think the biggest misconception is, number one, us and the loan officer, whoever you use, we don't judge you depending on whatever your credit score is. Because again, at one time I didn't have the best credit and I had to learn. And the first time I had my credit pulled, there was stuff on my credit that I didn't even know was there, right? Yeah. So that, that becomes part of it too. So I think number one, if you're a consumer and you're out there, one thing you need to know is do not be afraid of the credit picture. And the other thing is, more and more, what your credit score is going to be important. So even if you go down this journey, you don't buy a house, getting your credit looked at, seeing what's on there, that may be correct, not correct, whatever the case is, I think is a good exercise.
Well, and how many times do they find stuff that's on there that might be incorrect?
It's not accurate, yeah.
Yeah. Or so you might not even have credit.
Right.
You find a lot of people that are young or just haven't had, credit cards and that kind of stuff. And you think that you're doing the right thing by not taking out credit cards and things like that,
right,
which is great. But maybe by going through this process and talking with your loan officer, you can kind of figure out, hey, let's take out a credit card, get a little bit of credit, and then really understand how to use it and, make it work for you.
Yeah. So I think another kind of, on that same, in that same lane, I think a lot of people don't understand, and they think that, a house will, and especially here on the Eastern Shore, just about anywhere on the Eastern Shore, well, if I buy a house, it's going to cost me more in rent. And I mean, that couldn't be farther from the truth.
I can't tell you how many times that we hear that in any given day, week, month. It really just isn't the case. And I'll tell you, and firsthand, how many people that come in from the rental side, they just either going back to the credit, they didn't think that they had the credit. Well, typically, depending on who you're renting from, if you can rent, you can buy.
You had to pass. You had to pass a credit check in order to get into a rental. Yeah.
And the majority of it, is what it's 600 as a minimum.
Right.
So
Right.
if you can pass on a credit score and all that kind of stuff, dollars to donuts, we can put you in the same style house that you're renting or nicer, probably even new construction in some areas for less money than you're paying in rent.
Yeah. I mean, a lot of cases, the same house somebody's paying $1,200, especially with the rates as low as they are today. We can get them in that same house for less they're paying in rent, and they actually have ownership.
Right.
But I think that there's a huge misconception as well. If I own it, my monthly payment's going to go up. And in some parts of the country, this is different. But here on the Eastern Shore, a lot of times your rent is going to be higher than what you're going to pay for that same house for a mortgage.
Absolutely. And I think too, the point that you just brought up about interest rates, I mean, that they're historically low.
Right.
And, for the time being, they're going to stay that low. So now it's kind of, in my opinion, the time to really start diving into that and seeing if it does.
Because they're not going to always stay that low.
They're not going to.
Yeah.
So, it's kind of that old adage, you got day one's, got to start at some point in time. So why not today?
Well, and let's highlight that for a second. So, you're a consumer out there, you hear rates are low. Oh, well, rates are, what does that mean to me? Well, what that means is the price it's going to cost you to get a mortgage is a lot less. And we're in 40-year historic lows.
Mm-hmm.
So in the 40-year history of them tracking mortgage rates, we're on the low end of the spectrum. So as rates continue to rise, what that means is for that same house you're looking at, your monthly payment's going to go up. I mean, we're seeing interest rates in the 3.5% range.
Mm-hmm.
When I bought my first house, interest was 9%. So I mean, that's a substantially different swing in the consumer's favor.
Absolutely. Yeah. And I think, that's all stuff to take into consideration and think about, that you might be able to buy more house today than
Cheap money.
It is cheap money. And you might not necessarily be able to buy that same house for that same, monthly payment, even at the same price 2 years from now.
Right. Right. So one of the things you mentioned too was the financing piece, and you thought you had to have 20% down.
Mm-hmm.
There's a lot of different programs that are out there. Here on the Eastern Shore, a big program is USDA.
Mm-hmm.
USDA loan, you can get into a house for 0% down,
Yep.
meaning there is no down payment that is required for that loan, right?
Yep.
So that's one thing that a lot of people don't know. Most people associate FHA with a first-time home buyer, right?
Yeah.
But they're unaware of this loan product that's out there that is USDA. Talk about that for really quick.
Yeah, I mean that's definitely especially for a lot of my clients, it's a big deal. In fact, wrote an offer this morning, using USDA. So for them, being able to get into that house with very little money out of pocket, and not even to mention if here locally a lot of times we're getting the sellers to help pay offset some of the closing costs and things like that. So using this program, especially as a first-time home buyer and that kind of stuff, you might be able to get into that house with very little or nothing out of pocket. So again, when you start thinking about what you're paying for rent, if you can get into a house and come out of pocket with nothing or a few $1,000s, I mean, it's something really to be, to consider.
Because that's another big concern with people. Okay, well, I can afford the monthly payment, but I don't have any money. I don't have any money saved. And that becomes another issue, right? Yeah. So with USDA, that's something that can solve. One thing that you mentioned was closing costs, and I think another huge misconception when it comes to buying a house is people associate closing costs and down payment as the same thing.
Yeah,
and they're not, right?
Correct.
So, and for everybody that's out there listening, when you go to buy a house, your down payment money, let's just say it's 5%, that does not include your closing costs. Mm-hmm. So that's a totally separate fee that you have to come up with. And closing costs are, when you get a loan, there's fees associated with your loan, your taxes, your insurance, all those things are escrowed for when you go to settlement. So they're two different things, right? So that is one thing that people need to know, that if they're thinking about buying, right, even if you go with a USDA product that's 100% financing, potentially you could have to come out of pocket with closing costs.
Sure. Sure. And you know, and that kind of is something that you and I talk about all the time with, you know, first time home buyer or whoever it may be. You know, they're nervous.
Right.
They don't know what they don't know.
Sure.
So a lot of times that first hurdle is just getting them to even engage in a conversation.
Right.
Well, it's worth having that conversation. Maybe you don't get the information, you know, maybe you don't hear what you want to hear, and maybe it's going to take you longer than, you know, than you thought it was going to take, or maybe you thought that you couldn't do it and now all of a sudden you can buy. But it, you know, having that conversation with the expert, you know, in your market and in our market, hopefully it's us, about, you know, how does this work? How can I get into a house? What does it look like? You know, and you might find out that you can come out of pocket with little to nothing out of, you know, funds, or maybe you need a little bit more, but it's just, you know, it's like anything else. Knowledge is power.
Right. And so USDA is one loan type. Probably the most popular that most people know about is FHA, which we always hear the consumer associate that with first time home buyer loan, right? Which is another program that is a lower down payment, 3.5%. So
Yep.
of your purchase price, let's say you buy a house for 200,000, if you were to get an FHA loan, you'd have to come up with 3.5% of that purchase price plus your closing costs. Now, as you mentioned, in a lot of cases, if you're a buyer, you can ask the seller to help and to assist with closing costs. But FHA does require 3.5% to be put down, which is a loan program that most people are aware of. Not really aware of how it works, but they're aware of what it is.
Yeah. Yeah. And I mean, and again, you know, for a first time home buyer, and maybe not even a first time home buyer, that's definitely, you know, in a very affordable way to get into a home.
Right.
Especially, you know, they're a little more lenient on the credit scores, you know, things like that. So, you know, one thing to take in mind too, though, is, you know, as you're going through that process, is it is mandatory that you're going to come out, you are going to pay for the 3.5% down.
Correct. Yeah.
You can't, you know, get a
Can't
seller,
borrow it.
or borrow it or things like that.
Right.
So, but again, you know, that's a, in my opinion, kind of a minimal investment.
Sure.
You know, to get you into your house.
Right. Yeah. So the other thing I think that most people don't understand when they're thinking about buying a house, right? You know, like what are some of the advantages of buying a house? You know, besides you own it, like, you know, what are some advantages of owning a house? And I think a lot of people, you know, maybe aren't really aware of the potential to build equity. You know what I mean? For me personally, you know, having equity in my house allowed me to do different things in business because I was able to pull money out of my house, right? But a lot of people don't understand, you know, what is equity? How does that work? You know, why does it even matter to me?
Yeah, I mean, obviously, there's a lot of different things that you can do with that. I mean, from, you know, like you said, pulling cash out, you know, or potentially, depending on, you know, what you owe on a house, you know, putting a line of credit against it, things like that. I think the other big thing, especially, you know, kind of the thing we've been talking a lot about first time home buyers, is using that first house purchase kind of, you know, as your stepping stone to maybe, you know, what you might consider your forever house later on.
Right.
So, you know, the equity that you build as you pay down your mortgage, as whatever you put into, you know, down payments, all that kind of stuff, and maybe even upgrades and everything, you know, included, is that, you know, hopefully over time, you know, however much time that is, you know, that's going to be at maybe a minimum your down payment on that forever house.
Right. So, but I don't know, say I know nothing about equity. How do I build equity in my house? How does that work?
Yeah, so I mean, obviously, the first step is, you know, making sure when you buy the house, you know, you get the best deal.
Right.
Obviously, so to that end, you know, one thing that I would say is the quicker that you can pay down your mortgage, the better, for a couple of reasons. One, you're going to build equity, which means you've got, you know, if your house, you know, is worth $200,000, but you only owe $100,000 on it, then you have $100,000 worth of equity in
Right.
it. So, you know, as you pay that down, the lower the number is, you know, if you can pay it down quicker, then you're going to pay less interest and everything else. So now, using that same scenario, if you have that $100,000 in equity, to your point, maybe, you know, you refi and you pull that $100,000 out to start a business, or you sell that home and use that $100,000 towards, you know, your new purchase or whatever the case may be. So it's probably, you know, the best way and the best purchase that you can make in order to build that equity and to be able to, you know, over time really, you know, have a true asset that you can, you know, turn into to real money.
Right. So if you don't have the ability to pay it off any faster, just so people understand, how, just pretty simple, how you build equity in a house is every month that you pay your payment, and a lot of people don't realize this, right? That there's a percentage of that payment that goes to paying down the principal, paying down what's owed on the property. So over time, that principal goes down, and hopefully the value of the house goes up, and that's where you get your equity, right? So it's almost like a forced savings account. And I think most people don't have that understanding of that's one of the major benefits of owning a house.
Yeah, absolutely. And I think that's, if you've been renting, if you kind of change your mindset a little bit and think about, even if your rent payment's the same as your mortgage payment, you're every time you make that payment when you own the house, you are building that equity. And then you do have something, to show for it, after however many years of renting, and you pack up and you leave and you're left, with nothing.
Yeah.
So I think that's something that, to really seriously consider to see if buying a house over renting makes sense.
Yeah, absolutely. Yeah. So we talked about FHA, and at any given time, like, here in Salisbury, Wycomico County, sometimes depending on situation, there's grant money available through programs like Salisbury Neighborhood Housing. So there's different things that are out there that help people. And, one of the other advantages, at least in today's world, is, from owning a house, you do get some tax advantage to it. You do get some tax savings on it. So that's another huge advantage to someone that, is thinking about becoming a homeowner.
Yeah, absolutely. I mean, and those are the things that, you need to be talking to, obviously your agent about, you need to be talking to your lender about. And then honestly, whoever's, preparing your taxes and things like that. So you really understand the full benefits of home ownership and, those pieces like equity and then, what may be a potential write-off on your taxes and things like that. Because, if you can write something off on your taxes, you might not physically be able to see it at that time. But, come the end of the year and then into April and all that kind of stuff, that might, help you get a little bit more, refund back from the government.
Sure. Yeah, absolutely. I think another, huge misconception when it comes to purchasing a property or just a misunderstanding is people just don't even know where to start. They don't even know, what do I even do?
Yeah.
Who do I even talk to? You go on the internet, there's so much misinformation that's out there. And I think number one is what we talked about kind of at the beginning is knowing and understanding your credit picture, and knowing and understanding like what you can afford in a mortgage every month, right? And kind of looking at that as to what can I afford? What do I want my mortgage payment to be every month? Do I have money saved? Do you know what I mean? Do I want to start saving money to put money down? Do I want to go USDA, whatever the case is? But first and foremost, it's understanding my credit picture and then understanding how that relates to my financing. So the last thing you want to do, and we've seen this happen, is somebody goes out and they really like a house, and for whatever reason, from a financing standpoint, it's just not going to work out, and they kind of get discouraged. You're better off to be prepared before you go out and look at a house, is understanding your credit, understanding how it relates to your financing, and making that process so much more seamless.
Yeah, absolutely. And I think to that end, something that we talk about all the time is, really being educators. So, the one thing is if you have no idea, how to go about buying a house, and that's fine. That's something that we do every day.
Sure.
Pick up the phone and give us a call. So, let's get together, come into the office. Let's have a conversation about exactly what it looks like, the possibilities that, that you've got. And I think the other thing too is, it's okay to get to work on and get pre-approved.
Yeah.
And and I think sometimes, you talk to other people and maybe they've had a bad experience and, the realtor asked them, are you pre-approved? And you said no. And you said, okay, well, just call me when you do get pre-approved and hang up the phone.
Yeah.
Well, I think within our group, we do a pretty good job of the education and helping, those people get pre-approved or help them get, go down that path and that kind of stuff. So, I think that's actually one of the misconceptions too is, we can't go and show you houses all the time if you're not pre-approved, but at least come in and let's talk about it.
Right.
Let us work with you and get you where you need to be.
Well, and it's a benefit to you as a consumer. Before you look at anything, it's a benefit to you to know your picture, to know what works for you, what works for you from a payment standpoint, what works from you from a down payment standpoint. and what your credit is. And again, it's not something to be afraid of or to be embarrassed of. Just having somebody look at it and then point you in the right direction, because you're not going to know unless you get your credit pulled.
That's right.
And if you have some things you have to get fixed or whatever the case is, at least and that's all part of it. That's all part of getting your credit cleaned up so you can get into the process of buying a house. Do you know what I mean?
And that helps us, do our jobs and put you in the right houses and to look at, because if there's stuff that doesn't make sense for you, there's no reason for us to focus on that. We want to find the right house for you, and that works within that you like, that works within your budget and everything else. So the more we can dial that in for you, the better.
Yeah, so to kind of recap, know your credit picture, right? Don't be embarrassed, because at one point everybody has bad credit, right?
Absolutely.
You know what I mean? Because we all start with no credit, right? There's all kinds of financing programs that are out there. USDA can get you in 100% financing. FHA is 3.5%. Then, VA, which we didn't talk about, we'll talk about on another episode, but that's another low down payment, loan process that's out there. And your closing costs are something totally separate than your down payment. So these are a lot of misconceptions that people have or get misinformation about when they buy. And, the whole purpose of this is just to get education out to the consumer. So when it comes time, whether you buy a house through us or not, you just have knowledge, to go through the process, because we believe in home ownership, and the more people we can put in houses, regardless if we help them, we think it helps everybody.
Absolutely.
So just a couple of things we talked about today to go over to help you get more educated on the home buying process. Next episode, we'll talk about more myths and misconceptions when it comes to buying a house. And this is Brandon Brittingham. We appreciate your time here with Rich Barr from the Maryland Delaware Group of Long & Foster.
Appreciate it.